I told you this was about to happen, and guess what? Back on June 23rd and for several of the following weeks, I published the first of several videos discussing the looming opportunity to make money in small cap stocks. And I followed a week later on June 30th with a video discussing how small caps would benefit from low inflation. Links in the pinned comments below. That all sounds like a lot of fun, but now let's discuss the potential problems that come with making money in small cap stocks and how to avoid them. Now notice I didn't use the word investing, and we'll talk about that later. Small cap stocks are often touted as high risk, high reward investments that can be enticing to many, quote, investors. Look, small cap stocks are like the Wild West of the stock market. They're full of unknowns and unpredictability, but they also have the potential for huge returns, which is what I think is their lure. Small cap stocks are essentially the little guys of the stock market, with market capitalizations of $250 million to $2 billion. They're often newer companies still finding their footing in their respective industries and looking to make a name for themselves. And because of their smaller size, they can move really quickly, either up or down. Fun on the way up and very painful on the way down. As I've mentioned in my previous videos, using small caps in your portfolio now is a 6 to 18 month trade idea and not a long-term investing idea. When it comes to putting money to work in small cap stocks, there are a few common pitfalls that investors need to be aware of, like higher volatility, lack of liquidity, and being more susceptible to market manipulation. The lack of liquidity and market manipulation are easy to remedy if you invest in the Russell 2000 ETF, IWM, or in ARK Invest's ARKK, which gives you exposure to higher risk, innovative companies, some of which are small cap. If we look at three of the largest small caps at about $2 billion in market cap, you can see that volatility here. Now, I avoided regional bank stocks for my examples because there are many in the Russell 2000, and I really don't want to look at those. I don't see those as great investment opportunities. Now, when we look at the other end, close to the 250 million market cap area, you can see the ride gets even wilder, both on the way up and on the way down. So what's the takeaway from all of this? Well, when it comes to small cap stocks, it's essential to do your research and understand the unique risks and benefits associated with these investments. Don't fall prey to the get-rich-quick promises of some of the small cap stocks. Instead, take a measured approach and protect yourself by investing in a small cap ETF like IWM. Also, as I mentioned in my two previous videos, this move into small caps is not a long-term investment thesis. It's a shorter-term profit or trading strategy that might continue to do well over the coming months or even longer. Are you currently invested in small caps? If not, are you planning to invest? Please let me know in the comments below. And if you're looking for more insights into the world of finance and investing, be sure to subscribe for new videos every week. Look, the markets have been a little bit scared because the big run-up so far has been concentrated in just a few mega cap companies at the top of the S&P 500 and the NASDAQ 100 indices. It's healthy that the market breadth is starting to broaden out and move into small caps, and hopefully this recent sharp upward move will continue long enough to lock in some big profits over the next months or even a year or more in small caps. Even though small caps appear to be presenting a short-term trading opportunity, I still caution you to be an investor rather than a trader who tries to time the markets. Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance, rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind and it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water